In this video, we'll talk about different approaches to position sizing. Stay tuned. Hey traders, a very warm welcome to you. Okay, so position sizing, it's such a crucial part of the game. You can have the best strategy in the world, the best setup in the world, but you know what? If your position sizing is out, it's going to lose you money over time. It's just the way it is. It's such an important key to the whole picture. So we've got a couple of ways that we can position size. And obviously, I don't think this is talked about enough. Now, I don't think there's a right or wrong way. I'm going to show you the way that I think that I like to do it. But I also know other very successful traders use a different way. So the two main ways that we can position size are fixed and variable. So what is fixed? So fixed position size is saying, hey, you know what? I'm always risking the same amount per trade, regardless of what the trade is, regardless of the setup, regardless of where it is, what market is, my risk is X. And you've calculated that based on your account size, you've calculated that based on your total risk tolerance, all that kind of stuff. And you said, you know what, I'm never risking more than X on my trade. And you adjust your position size based on your stop distance, and simple as that. So you're in here, your stop's here. We know this size is pretty basic formula, guys. We just have the distance between the two in position size, and then we know. So if that's 250 points, and that's 25 points, I'll stop. We know we can go at £10 a point if we're spread betting, or the equivalent if we're trading CFDs, futures, or what have you. So that's your fixed one, and that's pretty easy to do. And the theory behind that is that people say, hey, I don't know if my next trade is going to be profitable or not. I've got no idea. You know, I've got my edge, and I just trade my edge, and I know that over time I'm going to make money. And it makes perfect sense to me. I understand it. I get it. It's a sensible way of doing it. And you know, if you've got problems with discipline and you don't want to have any cognitive load on your mind, then this is probably a good way to go. Now, another way of looking at it is to look at a variable position size. So what is a variable position size? A variable position size, the kind of concept is that each setup is not created equal. So, you know, if you've got your setups here, you might have, you know, your A plus setups, your A, you know, your kind of B, your C, and your D. And maybe you can go further, but you get the idea. You're grading the setups. So the theory being is that your A plus setups are your biggest position size, your A slightly less, your B slightly less, and then your D even less than that. Obviously, you know, we could probably do one more here, couldn't we? That would make it more sensible. That's the kind of structure that you do. So you have more size on your very best plays. Now, I like that strategy myself more than the fixed position size, purely because I know that there are setups that I take that have got a really high probability of working. They've got a good risk reward ratio on them, and I want to go hard on them because I want to make them count. They don't happen very often, but I want to make sure that I'm putting a lot of risk on the table. Now, of course, the consequences of that are, if you're trading those D or Cs and you're just trading a small amount, and you're kind of accumulating size, you can lose all of it in one trade on your A plus setups because you still don't know if it's going to work or not, but you're risking more. But the thing is that I don't think all setups are created equal. I've got a kind of a flag system for grading my setups. You know, I've got some which I absolutely love and I would definitely take time after time after time. And then you've got some of those that are kind of, they're there, they do okay, and you either eliminating from your strategy completely, from your plan completely, or you say, you know what, I'll take them, but I'll take them in small size. And I think there's always that mixture between the two. It's never knowing whether it's a good one and whether it's knowing that one is worth putting a bit more capital into and being rewarded for taking that extra risk. And it's also the case of, you know, if a trade is going your way, pressing it harder. So adding more position, adding more size, but being prepared to give back that other profit. So there's the two kind of ways that you can do it. You got your fixed and you got your variable. Let me know in the comments section below how you do position sizing. Now, obviously, when we're grading our setups, we've got to be pretty clear as to which setups we think are better and which setups we're going to go in harder for. So we need to have that down really before we use the variable size. I would recommend for beginners, you keep it to fixed until you get comfortable with the different types of setups, and you know in your heart which ones are the best, which ones you really want to get stuck into. You know, this was still a very good way of doing it, and I say, I know plenty of traders who do that and do very, very well out of it. A variable is another way of doing it, and this is kind of the way that I do it, and I also know other traders who do it very well out as well. So it's a personality thing, it's how you approach trading, it's your style, your strategy, and just your overall goals and what you're looking for as a trader. Anyway guys, that's position sizing, different approaches to position sizing. If you can think of another one, comment section below. If you like the video, give it a thumbs up. Take care. Bye-bye.